The Association of Manufacturers in Uganda has asked for lower lending rates, affordable lending, and general improvement in the financial market conditions that will help reduce the cost of doing business in the country. And that's everywhere. These and more are part of the discussions at the recent second annual Uganda Manufacturers Association Summit. Here's a listen.
We want to challenge you, the financial institutions. Manufacturing, the internal rate of return is around maximum maybe 10%. So if you give somebody at a rate of 15%, certainly you will not be able to pay back and continue in the business. So you think about the internal rate in the country, think about the businesses, and we know that your access, some of you access resources at a very low interest rate from the world, but then you come and almost double, triple the interest rate to our manufacturers. So we want to challenge you, financial institutions, that Uganda is the only country in Sub-Saharan region which with the highest interest rate. You are I don't know why you continue to be the highest. You know, South Africa is low. All these countries are very low, but Uganda continues to have the highest interest rates. So we are asking you to be considerate to especially our manufacturers, because manufacturers are doing a good job. As we speak now, they are contributing 35% to our revenue out of the 21 trillion we collected the other years. 35% was from the manufacturers. Out of the 60 billion, they are going to contribute roughly 17% to our GDP. So this is an important sector, very organized. I don't know why you should continue charging them very high interest rates. So it's our appeal to you that you can reduce the interest rate so that our manufacturers can access cheap capital. On the part of government, we are enhancing Uganda Development Bank to have more capital so that we can support the manufacturers. We have invested substantial amount of money in Uganda Development Bank and want to appeal to the manufacturers to use Uganda Development Bank. If you have a good plan, please go to Uganda Development Bank. You'll be able to access some resources at a lower interest rate.
The Financial Symposium is going to discuss that. But just as IFC, I would like to point out some products that we have that address issues on interest rates. So one of them is blended finance, where we bring in concessional financing and blend it with commercial financing that brings down the rates. But it also depends on the credit quality of the client. Sometimes we go into clients, I won't delve into the details, but I know you understand when I say credit quality of the client. And there are many other factors which will be discussed today. So I would like to extend our gratitude to Uganda Manufacturers Association for organizing this important event and for providing a platform to address the critical financial challenges facing the manufacturing sector. As we all know, the manufacturing sector drives economic growth and provides jobs which are much needed in our country, because we know that Uganda is predominantly youth. We did carry out a diagnostic on Uganda as IFC, and we noted a lack of productive finance as an ongoing challenge faced by the sector, and not only the manufacturing sector, but generally the private sector. And you also heard in the previous remarks that the manufacturing sector contributes 19% of all the exports in the country. So it's important that we find out, we discuss and get the different solutions for this sector, as it has a big contribution to our economy. So as IFC, we are committed to promoting the private sector in emerging markets. As you know, IFC is the private sector arm of the World Bank, so we deal with the private sector. And as such, the manufacturing sector is key to this agenda. Unfortunately, the sector is faced with challenges in obtaining innovative financial solutions. We believe that the innovative financing solutions, inclusive of advisory services, such as impact investing, public-private partnerships, green bonds, blended finance, asset-based financing, can unlock potential of manufacturers, particularly the small and medium enterprises.
We are pleased as ABSA to partner with the Uganda Manufacturers Association for this important symposium. The forum provides a timely and necessary platform for collaboration between financial institutions, government, the industry, and the development partners, all working towards a shared goal. And our shared goal is to unlock fit-for-purpose financing that truly supports Uganda's manufacturing sector to thrive. It's often said, and rightfully so, that Uganda's economic future lies in the growth and transformation of the manufacturing sector. But we must not just talk about this, we must act on it. And Honorable, we've had the plea around the interest rates, we've had the plea around the turnaround time, and we hear the plea around security. Uganda is a very rich country from a resource perspective. We have a very youthful population, and then we do have quite a number of minerals and agricultural outputs. All these resources really, really support the manufacturing sector and a strong foundation towards building competitive and a resilient manufacturing sector that adds value locally, generates employment, and then boosts exports. At ABSA, we recognize the central role that productive sectors play in the long term and inclusive development. We do support 20% of our loan book, Honorable and UMA. We support the manufacturing sector and the agriculture sector, up to 20% of all the loans that we give out. So we are a key player in this sector. We actively support agribusinesses and the entire value chain. We do support distributors and suppliers, cognizant of the fact that the growth of the manufacturing sector is really driven by the supply chains and the distribution chains. So we continue to explore new partnerships and opportunities to expand our support to the sector. And these new partnerships will drive the cheaper financing that we have been talking about, or that the Honorable has hinted, because it is only through these partnerships that we are able to source cheaper funding to pass on to the manufacturing sector. Our approach is anchored on impact and sustainability, ensuring that the financing meaningfully contributes to the economic development and transformation that aligns to NDP 4, which are the goals around government that promote job creation, value addition, industrialization, and increased exports.
While we are the regulators, someone from government needed to take the mantle to be able to allow for financing of the manufacturers, and more so to allow for easy access and innovative access to financing solutions through the capital markets, which is why we signed the MOU sometime in 2018. And since then, we've had a lot of work that we've done with the association, in addition to facilitating and partnering with the association for this symposium. This symposium is primarily to talk about the innovating financing solutions within the manufacturing sector, and we're here to do just that. And I'm happy to be with ladies and gentlemen in the room to literally address this together with the banks. The fourth National Development Plan highlights a very, very big part for us to play as the authority to ensure that there's a sustainable and favorable regulatory environment that will allow for not only the manufacturers, but all issuers to be able to raise financing within the capital markets, and which is why we're here, to allow for that regulatory environment. So while the distinguished lady from the IFC talked about private capital, there's need for a regulator who is going to ensure that the access to private capital is fair and there's a favorable disclosure from the manufacturer's side. So we're trying to bridge that gap, and we're trying to ensure that the person looking for financing can easily raise it through the different providers of capital. Is it public markets or is it the private markets? The private markets, among which IFC is also included, and we shall be having quite a number of them in this room tomorrow from the East African Venture Capitalist Association. So we appreciate the vital part that manufacturers play. We appreciate that they're the heartbeat of the economy. We appreciate the impact that they have. Should they sneeze, the economy actually is affected. And we're saying, should you need patient capital, should you need access to patient capital and someone who will be able to grow with you in developing your business, your idea, we are here to help you. We are here to allow you at least access to these providers of capital.